Hey everyone. Unfortunately, we had some Facebook issues, so we are going to just record this and upload it for everyone to see later. First of all, I want to thank you, Erica, for being here, taking your time out of your busy schedule to meet with us today.
Yeah, of course.
We're going to share some home buying strategies.
Yeah.
So whenever you're ready, take it away.
Yeah. Thank you for inviting me. This is great. I am Erica Rawls. I am a realtor at Next Home Capital Realty, and we enjoy working with clients, buyers and sellers. And one of the things that we really strive for is the objective is to change people's lives, not to get too heavy. We think that buying a home is one of the largest investments that most people want to make, and it's really important for people to actually understand what they're getting into before purchasing a home, right? So one of the things we like to do first is to sit down with them and have a buyer consultation, right? There's a lot of people, they'll call us up, and the first thing they want to do is, I want to see 123 Main Street. Okay, so how long have you been looking for a home, right? What's your time frame? Those are some of the questions that we ask. What's your budget? And you hear the wheels spinning, like, okay, they really didn't think about this. They just got excited, they saw this beautiful home, they didn't think about it. So first thing we recommend, come up with a plan when it comes to purchasing a home. And one of the things the first thing we do is we create a buyer profile for understanding their needs and also their wants, right? And then coming up with a budget, understanding what it's going to cost them to purchase a home. That's another big thing. A lot of people right now, they're struggling with the fact that they think it costs them they're going to have to put down 20% down on a mortgage to purchase a home, and that's not necessarily the case. So we go through those items with them when we sit down and talk with them. Understanding what's going on in the market today is really important. How much house can you afford? Because affordability changes all the time. Interest rate plays a big part in that. So right now, interest rates are really stable, and they're projecting that they're going to stay that way for the end of the year, which wasn't the same information we received like a couple months ago. So information changes all the time. Having those tools and understanding up front before purchasing is huge. We like to give people all the tools necessary, so when the time comes for them to actually go out and start shopping, they understand that. And they're prepared.
So is right now a good time to start looking for a home since those interest rates are stable?
It is a good time, and there's not a lot of houses on the market. So we have very low levels of inventory. So real estate is measured by the number of homes you have on the market compared to the number of buyers that are out there. So it's actually going to cost, for Central PA, we have less than 6 months of inventory. Okay, so that means if no other house went on the market, right, it would only take us 6 months to absorb. I know, just looking just today, we have less than 3 months in Dauphin County overall. Less than 3 months. So it only takes us 3 months to sell all the houses that are in Dauphin County. There's really hot pockets or price points out there, and a lot of our buyers, which they're in that hot spot. So between 100 to about 300,000. They're the ones that are really frustrated right now because they're not finding that house. And when you find a house, Nicolette, you have to compete. So having that consultation up front, knowing how much house you can afford, coming up with a strategy before going shopping is really important, because you more than likely are going to have to compete on a home. And it's unfortunate because people get frustrated. A lot of times, especially our FHA buyers, because if you're conventional, it's a type of financing. You have the federally backed loans, you have FHA, and then you have conventional. Conventional buyers, it's a more streamlined approach, and they don't have to worry about going through a lot of red tape, government overlays, meaning you have an inspection, you negotiate those terms, and then you pretty much go through the normal underwriting process. And it's slowing me down because I do this every day. So I want to make sure that everyone that's listening to the replay of this understands as well, because we don't have that interaction and feedback. So understanding what type of loans that you're going to have is important as well. If you need seller's assistance, more than likely it may be a more frustrating time for you, because if you're in a competing situation, right, that means that you're not going to have that much leverage because you need that seller's assistance. You need the seller to actually provide you cash in order to get to the closing table.
And not everybody's willing to add in seller's assistance, right?
Not everybody is. They don't have to right now either. They don't have to because it's low inventory. So if someone's competing, if you have more than one buyer wanting your house, if one buyer's saying, yeah, I need seller's assistance, the other buyer's like, no, I don't need it. Or even better, they have cash, right?
Yeah.
They're going to take that person with cash all day long.
Mm-hmm.
Yeah, so we let them know up front what to expect before purchasing a home.
So you were just talking about the different types of loans that you can get, whether it's conventional or FHA. Could you give us a brief description of how one would determine, or how you would help the family or the potential homeowner determine which loan they would fall under?
Yeah, so I'm not a lender. However, with experience, I know that a lot of it has to do with your credit score, okay? And also the amount of cash that you have available. So your debt to asset ratio, meaning how much debt you have compared to the cash you actually have available, is going to determine what type of loan programs that best benefit you. Again, FHA is more for people that have may not have the best credit score, right? Or they're first-time home buyers, and they may not have a lot of cash available to them. So the amount of money they're going to need to come to the table is going to be less than someone that has a conventional mortgage. Although right now they have really good conventional mortgages out there where you only need 3% down, 5% down. You can get up to 6% seller's assistance in some cases in some conventional mortgage. But again, I'm not a lender, so I don't want people like, oh, well, what about, I can give you information, but we have great lenders that can help you.
Okay.
Yeah. Yeah.
So then also, I know a lot of times people are hesitant because of their credit score. And you mentioned credit score is one of the things that lenders do look at. So from your knowledge, do you know what is like a good average, so that people out there that's saying, I want to buy a home, and what goal should I try to work up to if I'm not already there?
I'm seeing on average people have credit scores of 640. A lot of people think you need to have like an 800 credit score. That's not the case. Matter of fact, I actually had a conversation with the lender not too long ago where we were saying that a lot of people think that, you have an 800 credit score, I'm going to get the most favorable interest rate in terms. If you have a 740 credit score, you're going to get the same benefits as that person that has the perfect 850 credit score, 800. Yeah, and people don't know that. Yeah, so my goal for my clients is, okay, get a 740 credit score all day long, golden. Yeah, shoot for the stars and get that perfect credit score, if that makes you feel good. But as far as actually being getting competitive rates, 740 with a mortgage, that's pretty much all you need.
Okay.
Yeah. So one of the things that we like to talk about, the biggest one is the financing strategy. A lot of us are afraid of the idea of obtaining a mortgage and not wanting to face what they believe is going to be bad news, and they come out finding out different. Like, it doesn't cost you that much to purchase a home. So the biggest thing I like to take away from this is just talk to your favorite lender, or if you don't have a favorite lender, you can give us a call or your favorite realtor a call that they have preferred lenders, and just have that initial conversation so you know where to start. So are you 3 months out? Are you 6 months out? Are you 9, a year, 2 years, whatever it is? So you're going to have that plan. That's the biggest thing, biggest key, or I think the best information I can give, as far as starting your home purchase. Now, one of the other things I like to look at when we're working with the buyer, we like to give them information that's going to help them as far as, okay, the township in which they want to live in, right? What they can expect as far as their taxes, right? Because that plays a key part in the affordability. So one of the things you can control when it comes to your monthly mortgage payment is your taxes and also your interest rate, right? So if you have your interest rate, that's pretty much set by your credit score. With your taxes, we can look at that to see, okay, well, depending on not to get too deep, but depending on the assessed value of the home is going to determine, like, plus the millage rate for the township is going to determine what your taxes are going to be. So you may have one house that's assessed higher than another house. You may not be able to afford house A, but you can afford house B because their assessed value is that much lower. So there's so many different moving parts when it comes to purchasing a home that you just can't go out and just start shopping because you'll be overwhelmed. And I know for us, every client that calls and says, I want to see this house, right? And we say no, right? And they're like, please, look, we just want to see it. We're not ready to purchase a home. And we may bend, we may show them the house. Every time they do not buy a house, and if they want to buy a house, they go to write it, they're so confused and overwhelmed, and it seems to always fall through. So because we had that experience so many times, it's necessary for our clients to actually sit down and have that conversation. It only benefits the consumer, because you're not going to get surgery, not to get too extreme, without knowing everything, right? You want to know, okay, can the doctor help me? What's their background, right? And then what's my real prognosis, right? And when am I actually getting surgery on? It's the same thing. That's how we see it.
Totally makes sense. So then I know what you're saying, we're talking about like the different taxes and things like that. I know how houses are assessed at different price. So there might be a home that might say I want to look at 123 Main Street.
Yep.
And Main Street doesn't have, when you get in there, Main Street doesn't have all the bells and whistles that they were praying and dreaming for.
Yeah.
So I would think that one of those things, part of that conversation is kind of, I know you mentioned before about your wants and needs and being able to decipher. So how do people really go about that when you say to them, like, you want these bells and whistles, but according to these other factors and what your lender said, you can't really have all these bells, but you can have a couple of whistles.
Yeah.
How does that usually work out for you?
Well, it all depends on who the client is and their their willingness to listen. I know how hard it is when you really want something and that's all you want and you're just not willing to bend. Sometimes we'll say, you know what, why don't you take another couple months to save up money so you can get the house that you truly want. So it has the amenities in there. But here's the thing, once you move in that house, and this is what most people get to understand, once you move in your house, the likelihood of you actually changing what's already in there is high, right? So if it has the floor plan that you want, it's giving you the space that you want, right? And it has the ability to have like the finished basement that you want in the future, okay? The layout that you want. Your master bedroom, it's the size that you want, but it doesn't have that fireplace, but you can add it. I say all day long, get it at the price that makes sense for you and your family, and then just go from there. Like down the road, save up money to do the things that you want. Most people get hung up on the kitchens.
Yeah, that could be a deal breaker. Especially those people that really like to cook and bake and need an island in the middle and everything.
And it's the wife. So, but if the kitchens are dated, there's financing programs out there that would allow you to actually fix up your house, right? Get the loan to get the money to fix up the house after you go to closing. So it's not automatically a deal breaker. There's things that we can do to overcome the objections of the house. As a matter of fact, I'd rather have a house that needed to be repaired because you're going to get it below market. Okay, I shouldn't say that. More than likely, you can get it below market, right? We'll give you the ability to put money into it, get automatic equity, and fix it up the way you want. As long as, again, it has the things that can't be changed, like location, right? And then structural things, right?
So then you do the buying and the selling. I know a lot of times with people, you talked about, sometimes people think it's 20% that you have to put down, but really it's not, it could be even less. What are some things that people need to know besides, okay, this house is, let's say $100,000, so I need to be able to do that, and I'm planning for my mortgage for $100,000, but there are other things along the process that is going to be pulling some money out of their pockets, right?
Yes, Nicola, that's an awesome question because that's one of the challenges that we have with our buyers. So when we sit down with them, we'll talk about the extra costs that are going to be involved in purchasing a home. So yeah, you have your mortgage, but to get to the closing table, how much is it going to cost you? So you have, outside of just having your mortgage when you close, you do have your inspections. Right, that can cost you between $350 to about $500, sometimes upwards of $700, depending on all that you get. right?
And does the seller ever pay for the inspection? Is that ever possible?
It depends on the type of mortgage or financing. Yeah, not the inspection, but there's some things that the seller would be required to pay for. Yeah, most typically you'll see that in a VA loan. Yeah. So like your termite, sometimes with the well. But yeah, so you have your inspections, and you also have your appraisals, which that stings people too. So we tell them before in their buyer consultation that you'll have to pay between $350 to $550 for an appraisal. Now, the lender that we use, you can use your credit card for that to pay for that appraisal if you have one available to you. But that's an additional cost that you can expect to pay. Yep. Yeah. So your total closing cost, I like to tell people, based on your purchase price, is going to be around like 7% total. But you can get some assistance from your sellers, but it's pretty tricky in our market right now.
Okay. But those are things that you have to do before even getting to the table to get to sign a deed. Like you already have to pay for that inspection to be done.
Yes, that's out of pocket. Yep.
What happens if the inspector says, comes up with a problem, there's something that needs to be fixed or something's not correct? So will the seller, I'm assuming, will be responsible for fixing those things that the inspection person?
Yeah, so that happens quite often. So I'll say 98% of people that get inspections, they'll find some kind of repair that needs to be done. So it all depends on, again, your realtor and the conversations that you have with them and how you approach it. So I don't like to, for lack of a better word, I don't like to nickel and dime the sellers, right? So I always recommend you go after the highest ticket item, right? So, and also, what can your budget afford? So, and how much do you really want the home? So if it comes to roofing and HVAC system, or the chimney's crumbling, you're gonna see that before you have the inspection anyways, or there's a foundation issue. Those are the things that we should go after the seller for. But if the refrigerator may or may not work, depending on the price point, right? And how much you can afford, we may want to negotiate that. There may be, no, you won't be able to use a warranty if it's reported, so I can't even say that. But there's other ways to work around it, maybe get a credit for that, right? So there's different ways to go about it, but more than likely you want to negotiate it. And I would say, of all the transactions that don't go to closing as a result of inspections. Yeah.
And you mentioned warranty.
Yeah.
So can you talk a little bit about that? Like what exactly a warranty would be for some people that are not familiar with it, and the benefits of it, and also who's gonna pay for that warranty? How does that process even start?
Yeah, so so warranty, a home warranty is over and above what your insurance company may have. So that's gonna help with your HVAC system, like if that breaks down or the refrigerator needs to be replaced. It also depends on the company and what they're gonna cover. Some already have pre-existing conditions that they'll cover, meaning like if they're, for example, like that there was the water heater malfunction, and you knew that, the seller knew that. Some warranty companies may cover that pre-existing conditions, but most of them won't. So they're going to help with things like your appliances as well, cover it. So I like it because if you weigh the cost benefit of it, a home warranty, most times we'll negotiate that the seller pays for it. Okay, if they don't pay for it, then for your first 13 months, that's something that we'll pay for. Yeah, so you're expecting to have $450 to $500 depending on what type of warranty that you have. And the benefit of it is if something would break down, right, like your refrigerator, okay, you would call the warranty company. They're gonna have their trade company come out there, whoever the vendor is, and the buyer would then have to pay them $100, right? They'll come out, they'll either repair it or they'll replace it. And the only cost that came out there, or money that came out of their pocket, would be $100 compared to $1,200, $1,700 refrigerator.
Okay. And then after that 13-month period, then it's up to that new homeowner whether or not they want to continue with the warranty, and that they take that over themselves.
Yeah,
right?
so we'll educate them and say, okay, so it's going to cost you X amount of dollars over each month for you to pay for this. So just start paying away, a little bit now. They do have a lot of plans now where you can just pay it monthly too.
Yeah.
Yeah, definitely.
Okay.
Yeah.
And I know one thing we probably should have started off with is what would you tell our audience is the benefit of buying a home versus being a renter?
Okay, so the National Association of Realtors, they came out with a statistic, okay? Homeowners are 44 times, have 44 times more wealth than that of a renter. 44 times more wealth than that of a renter. I want to say it one more time. 44 times more wealthy than a renter, a homeowner.
What homeowners are they? Because I'm not wealthy.
No. You have more wealth than a renter.
Oh, because of the equity in the home.
Because of the equity in your home.
All right.
Yes. Yeah, it's the best.
So now I feel
investment.
rich, people. I feel rich.
Yeah, it's like the best investment that you can make. I say it probably on all of my videos. You have a silent piggy bank growing every month. And there's this thing with the 13th payment. Have you heard about it?
No.
Okay, so the 13th payment. So every year, most of us are getting tax returns, right? Okay, so most of us are getting tax returns. So I recommend during tax season, whenever you get your refund, January or February, right? You make one additional mortgage payment and apply it all to your principal. Okay, so what that's going to do is it's actually going to cut your number of payments down by 7 years.
By 7 years? One payment?
One
cuts
payment
it
a
down
year.
By 7 years?
Yes.
So is that how people are being able to purchase their home in 15 instead of 30 years?
Yes. So instead of, so I always tell people, they say, well, I'm going to get on a 15-year mortgage. Okay, you can, but what happens if life happens, right? And you can't afford that double payment that you're required to make, right? Every month. So I recommend that you just amortize it because money's really cheap right now, right? Take advantage of that 4% interest rate over 30 years, right? And then create your own 15-year payment plan back to them.
But then what if you don't plan for this to be your only home? Like a lot of people say this is my starter home.
Yeah.
So do you still recommend that people still do that extra payment?
I do.
Okay.
Because you're going to be pulling out more money. And the goal is that your house is going to be appreciating every year too. So the value of your house is going to increase, your equity is going to increase. So then that's what we refer to as a home equity swing, right? So the amount that you buy your house for, to the value of your home when you go to sell it, the goal is to have it to swing upwards. So, and the goal is to get as much money as you possibly can when you sell it.
Okay.
Yeah.
And you were talking earlier when you were saying about getting the home, even though it might not have all the bells and whistles, and you have the opportunity to do different things about it. So that actually brings up the price of your home when you're getting ready to sell it. Is that correct? Because you're doing improvements?
So one of the things I think as current homeowners that I'm not seeing, that I would love to see and get this out there to as many people as I possibly can. When you own a home, one of the responsibilities is to keep it up to date, right? Because having a conversation with a first-time home seller is very difficult right now because we're competing against HGTV. Yeah. And buyers are expecting their house to be like Joanna Gaines came through there, right? It's unrealistic. But they do. They really do. So I recommend, like every 5 years, just take a look at your house, right? If you know that this is your first house, it's not going to be your last house, you should be making upgrades to your house as much as you possibly can when you can possibly afford it, knowing that you're putting that in, making this an investment so that you can get the top of the market values you possibly can when you go to sell it. Yeah, don't wait until the month you want to sell because then you have to replace the carpet, replace the windows, replace the roof.
Trying to do everything
at once, and you may not have the cash to do it.
Yeah.
And it just, I don't know, it just dampens the mood. Yeah. It
So
does.
2 key points is that 13th payment.
Yes.
And to take your time and little by little make advancements on your home to make it really seller, Property Brothers. Make it look like Property Brothers.
When you're selling your home. And when it comes to buying your home, just do research with your realtor. Not all realtors are the same, right? Who I work for may not be a good fit for, the next person. So I think it's really important And I know a lot of my colleagues are like, oh my gosh, like why would you say that? Because I can't work with everybody, right? I'm not the best fit for each person. And your realtor should have a lot of market data and understanding, know what's going on in the market, know what's going to be a good value, how to save you money, how to avoid all those major pitfalls, right? That's what you want. You need someone that's going to counsel you, because you don't buy a house every day, right? Unless you do that, you're going to need someone that does understand that. So I think that's the biggest takeaway. Take your time. Interview your realtors like you would interview for a job, right? Yeah.
Or more like that doctor
or more like the doctor. Yeah, or the doctor.
Find out about them, what they know, how experienced they are.
Yeah, I mean that may be extreme. People laugh at me when I say it, but it's the truth. You're not just gonna go to any doctor. You're gonna do your research.
And while we're talking about that, share with our audience, because we were talking earlier, how long you have been in this field.
Oh my goodness. So I started investing back in 2001. However, I got my license. I've been licensed for 12 years. So yeah, I've been around for quite some time.
You know the tricks of the trade.
Yeah.
This is a good realtor to go to.
Oh gosh.
You are.
Yeah,
that's why we asked you.
Yeah, thank you. Thank you.
I know we talked about credit scores and the basis of how much to save, and we talked about little pitfalls, but is there anything else that you would suggest that people know? Like, one thing that stuck out for me that I personally didn't know is the commitment that you actually make to a realtor. Can you talk about that? Because from my understanding, once you sign with a realtor, that's it. So I can't say, oh well, no, I don't like Erica now, so I'm gonna go with this realtor now. But we already went through the process. But that's not true.
So you have a binding contract, right?
Mm-hmm.
But with each binding contract, you do have a right to cancel that agreement.
Oh.
And I say that in my buyer consultations. Look, if you're not happy with me, right, I at least ask you to give me 24 hours to make it right. And if I can't, I want you to be happy. Buying a home is the most stressful, probably one of the highest stressors in anybody's life, right? So I don't want to add any angst to anybody. I want to be able to add value. I want them to have an enjoyable experience, right? And that's for me and my team. We feel the same way. So our goal is to make this a pleasant experience. If you're not pleased with our work, yeah, please let us know. But you can withdraw from your contract.
Okay.
In writing.
I don't think my realtor put it to me that way.
Yeah.
That was so long ago.
Yeah.
I just remember telling my husband, like, look, this is it. Are you sure you want this? Because this is it. We can't go back. So
not at all.
Yeah. So tell us about getting to that point where you sit down at that lovely table and those keys are dangling.
Yeah.
Tell us how we get to there and what that process is like.
Yeah, so we've been shopping for a while. You finally found that house, right? So now time comes for you to complete a standard agreement of sale, which is can be overwhelming in itself. It's a 14 page document. I don't know, they just changed it. I think it got one more page longer. And you negotiate your terms. After you negotiate your terms, right, you're considered to have a agreement between you and the buyer and the seller.
So pause, negotiating terms, would that be the part where you talked about earlier about like if the warranty or seller's
seller's assistance.
So that's part of negotiating terms.
Inspections,
okay.
Mortgage contingencies, all of that. Items you want to keep in the house. All of that is going to be documented in there. So one thing I like to caution you too is what we don't do, because in order to avoid any hiccups with underwriting, right, and this is again, being a seasoned agent would know this, that any items that you want to convey, right, that are not permanently attached to the house, just put it in a separate addendum, because then that's not it will cause issues when it comes to appraisal, or possibly can cause issues with appraisal. If they see, oh, well, I'm going to get a refrigerator, a dishwasher, oh, the TV, or the couch, right? You want that to be separate. Yeah.
Okay. So I do have another question, but it's more on the other end. Well, after we've already bought a house, now we're ready for another house. So, but before I ask that question, is there anything else that you think would be pertinent pieces of information that our guests should know when they're looking to start that process and get their mind right about? home buying?
One of the things that we bring up in our consultation too is what they can expect through the underwriting process, meeting with their lender. That can be stressful sometimes to a lot of people, especially the first time home buyers or people that haven't bought in like 20 years. They're asking for a lot of documentation, not because they want to, it's because they have to. So just be prepared that they're going to be asking for tax returns, your bank statements, your W-2s, and if your bank statements don't look right, they may ask you for supporting documentation inside your bank statements. It's not because they don't trust you or they don't believe you or they're just out to get you. No, not at all. They have to make sure that they're protected and they're protecting you as well. So just be mindful of that process may be overwhelming. It's not meant to be, but it could be less overwhelming because we prepare the client to let them know that, hey, they were asking for these things. But I think that might be the most stressful part of the process for a lot of buyers, especially first-time home buyers. They're like, why are they asking me for all this information? Because they have to.
What is the average time you would say it would take from start to finish, from me coming in and saying, okay, we had our consultation last year, you told me what I should work up to, I'm ready now, today I'm ready, let's go, Erica. What is the average that you see it usually takes a person to be able to find, in a good market, to be able to find the home that they're looking for, inspection, everything, get to the point where we're signing and we're getting those keys?
I would say about 90 days. Yeah, I would say 90 days if we can find a house. It potentially could be longer. So, but we've been strategic. I mean, we're going up to people, just random people, seriously asking them, hey, have you thought about selling your house? Because there's no houses on the market. Really? Yeah, and we're being able to marry the two. Like, you know, we have a buyer for, for you. We don't overpromise and underdeliver, so they may like it. So the buyer doesn't feel pressure like, oh my gosh, I gotta walk in this house and like the house. That's crazy. No, that's not it at all. So,
are you getting any responses with that? Like, I never thought about it. Yes, I think I do want to sell the house.
You would be amazed at how many people would be like, you know what? I was thinking about it, or I never thought about it, or they'll call back and say, hey, Erica, you know what? I never really thought about it, but since you said it, if you do have someone, bring them through.
Okay.
Yeah.
Never know. Don't ask. Closed mouth doesn't get fed.
Yes.
You might not get it.
And you never know. That's right.
So is there a difference with the work you do with the realty company and compared to when a person wants to build? Is that two different realms?
I like to think that everyone's process is different, so unique. So building a home is definitely going to have some differences than buying a resale, because you're going to have more meetings with the builder. The process is going to be slower. So instead of a 90-day process, you're talking about a 6-month process. Your type of financing is more than likely going to be conventional, right? You may have a construction loan. So there's different pieces to the puzzle to get you to the finish line for new construction. I find it to be enjoyable. Some people are overwhelmed by the thought of, oh my gosh, I got to pick out a handle, like a little handle. Yeah. Yeah, so.
Yeah, you would think let's put anything in there, but I guess they want to specialize to what that person really wants, so that they make sure. And then also, there's probably a stipulation on what is included in that plan, and if you want the sparkly chrome one, you might have to pay extra for that. So it's good that people are knowledgeable about that.
Yep.
Okay. That's good to know.
Yeah.
So for people like me, that already own a home and starting to look, say, okay, I think my starter home has getting to the end of its rope now.
Yeah.
It's getting a little bigger, need a little bit more closet space,
right.
Moving on. What type of recommendations would you give for people that's looking to do their second or their third home?
Start early. It's never too early to start. Seeing how much house you can afford, and also what you need to do to your current home before you can sell it. If the goal is to sell at top of the market. Yeah, some people are like, I just want to sell it as is. I don't recommend that. But yeah, you want to start early. In that process. And know that things have changed. I mean, how long has it been since you purchased a home?
This year will be 10 years.
Yeah, so the process has changed a little bit as far as financing. Yeah. So I hear it all the time. Oh my gosh, I didn't have to go through this before. I'm sorry.
It won't potentially be any less stress because I'll be like, oh yeah, I'm familiar. Probably be double stressed then.
No. We don't like to see our folks stressed, and I think a lot of our clients walk away very pleased. So I'm excited about that. Yeah, you won't be stressed.
Hopefully not. Well, was there anything, last words or anything you wanted to share with us before we make sure that you tell the audience how to contact you if they needed anything.
Yeah. Last words. Yes. I believe in order to have the most, or to initiate generational wealth, I believe it's through real estate. I really believe that. And our goal this year for 2019 is to help as many people obtain their home ownership goals as possible. So I mean that from the bottom of my heart. I wish I knew what I know growing up at a younger age. And so we're trying to reach as many people as we can through all types of platforms. So if that's truly something that you want to do, please reach out to us. We're here to help. Me and my team, Sheena Lansana and Jamel Poteet, I had to give them a shout out. Yeah, and we are here at Next Home Capital Realty. You can reach us on our fan page, the Erica Rawls team, on our Instagram page, the Erica Rawls team. And our my number is 717-409-6500, and we're here to help. Thanks.
Thank you so much for your time. I truly appreciate it. Well, thank you, everybody. I hope you enjoyed. Have a good night.